Welcome. Thank you for joining us for today's MDM webcast, the 2019 Distribution Industry Outlook. Our 60-minute program is sponsored by Oracle NetSuite. My name is Tom Gale, CEO of Modern Distribution Management and website mdm.com. I have the pleasure of moderating today's program. We've been doing this annual call for several years now in partnership with both Baird and NetSuite, and I'm delighted to again be hosting today's program. Before I outline our agenda and introduce our speakers, a few brief housekeeping notes. If you'd like to access the handouts for today's program, please go to mdm.com/slides and download them now. Or email us at info@mdm.com and we will send them to you as a PDF attachment. Our program is being recorded today, and we will be sending you a follow-up link to this recording to share it with your colleagues or listen to it again. I encourage questions today. In the interest of time, we won't be taking them by phone, but please use the chat function on the bottom left of your screen to ask a question at any time, or if you're experiencing any technical issues. Simply type your question into the chat window at that bottom left and hit the Enter key. Finally, you can make the slides larger and view the presentation today in full screen mode by clicking the button in the top right of your screen that says Full Screen. You can return to normal size by hitting the Escape key. We've also scheduled time at the end of our program for questions as well. This morning, there was an article in my newspaper here in Colorado that started with this line: Sears will live on, at least for now. It details how yesterday its chairman and biggest shareholder won tentative approval for a $5 billion plan to keep the department store in business and fend off bankruptcy creditors. We've come a long way from the department store to the everything store. For those of you who attended this webcast 2 years ago, you may recognize this as the cover of the Sears catalog in 1900. This catalog was printed 14 years after Richard W. Sears started a mail-order business for watches out of Minneapolis. The company grew incredibly fast, selling increasing categories of merchandise at low prices to farmers and residents of small towns, who had limited access to retail stores, but an increasingly good access to an expanding network of mail delivery and shipping infrastructure. Does any of that sound familiar? I like to call out this catalog cover, the tagline here. This book tells just what your storekeeper at home pays for everything he buys and will prevent him from overcharge you on anything you buy from him. This is what disruption looked like 118 years ago, and what distributors and suppliers today have to address in its latest form, whether it be Amazon or other forms of disruption to traditional business models. Our webcast today aggregates a pair of surveys just completed by Baird and MDM, as well as research we've conducted over the past 12 months to give you our outlook on what is shaping 2019 for wholesale distribution channels in North America. Following a brief introduction from NetSuite's Ranga Bodla, Dave Manthe of Baird will provide a macroeconomic outlook for critical industry sectors, and then dive deeper into some trending and indicators for a few specific distribution sectors. Then my colleague Ian Heller and I will highlight the results of our latest survey and wrap up with some thoughts on the 3 themes emerging for 2019. As I said, we'll have time at the end for Q&A as well. To set the stage, I'd like to share the dessert first. First, the consensus of business economists is that we're approaching the backside of a record business cycle. 2019 requires a change in management approach. No one can predict exactly when or how fast, so we should keep in mind what economist Paul Samuelson said. The stock market has predicted 9 of the last 5 recessions. Nonetheless, we believe that 2019 will not be business as usual, with low odds of continued expansion through the end of the year. The second key theme is the need to leverage limited resources. There are too many distributors still in a follow someday mode, not a follow fast or fail mode. We believe there's a need for urgency in 2019. Finally, talent development has been a component of our top annual trends for the past 3 years, but arguably the least amount of progress made on an industry-wide basis to keep up with the changing workforce and new models changing the competitive landscape. Ian and I will come back to these three themes in more detail at the end. With that, I'm delighted to introduce our speakers today. Dave Manthe is Baird's longtime senior analyst covering industrial distribution and services. Prior to joining Baird in 1995, Dave worked at Strong Corneliuson Capital Management. Dave earned a BS from the University of Wisconsin-Madison and an MBA from Indiana University with a major in finance and a minor in management information systems. Ranga Bodla has more than 20 years of combined product management and marketing experience in the software technology industry. As the head of industry marketing for NetSuite, Ranga is chartered with driving the overall strategy and go-to-market for success across all of NetSuite's industries, including wholesale distribution. Prior to joining NetSuite, Ranga led a global team focused on the successful go-to-market of SAP's governance, risk, and compliance solutions. Ian Heller has served in a series of senior marketing and management roles in his distribution career, including at Grainger, Newark Electronics, Corporate Express, and HD Supply. I have been MDM's lead researcher and industry analyst on independent distribution channel trends, consolidation, technology, and competitive landscape since 1992. Welcome, everyone. And Ranga, with that, thanks for joining us from the Netherlands today, and please kick off our program.
Thank you so much, Tom, and I always appreciate this partnership. It's been something we've been doing for a number of years now, and I've always enjoyed the partnership and continued conversation with MDM. In fact, we started working with Modern Distribution Management when we were an independent company back all the way, I want to say 2008 was when we first started working with MDM, and we've continued that every year. One of the big things is if you don't know NetSuite or are not familiar with them, we are the first cloud company. We've been in business for over 20 years. We were acquired by Oracle in 2016, however, continue to operate as an independent global business unit of the Oracle Corporation. We have over 7,000 folks across the globe that support the NetSuite Global Business Unit, as well as the big thing which you should know is over 16,000 customers worldwide that leverage NetSuite to run their business day in and day out, many of those which are distributors. Now, just a quick introduction into NetSuite itself. So go to the next slide, Tom. So just a quick intro into NetSuite itself. If you're not familiar with NetSuite, we'd be glad to have a further conversation with you about who we are and what we have to offer. There's a couple big things that you should know. First and foremost, we're built on a unified cloud platform. So everything that we do is all about the cloud. We run our entire system in the cloud and provide that to you so that you can focus on how do you differentiate yourself in the market and meet those challenges of disruption that Tom just mentioned. The second is we know that it's important to make sure that the system can continue to grow with you and grow as you need it to change. And that's all why the Suite Cloud platform is so important. Third is that it's a unified platform across ERP, commerce, and CRM, all important technology topics that are part of this. The fourth is the ability to go global, an important characteristic that distributors are having to face with every day. Industry, of course, is also important. Now, while most of the folks on this call are distributors, many of you also dabble in manufacturing and services as well. And it's important to be able to have those capabilities in the system. And last but not least, the intelligence built in the system with things like artificial intelligence and machine learning, but also analytics. These are all pieces that are built into the NetSuite system to enable you and give you differentiation. Just the last slide is one of the big things that we've been focused on from a content perspective is everything that's happening around Amazon Business. NetSuite, in conjunction with MDM and a number of other resources, has been really focused on this whole topic of Amazon Business, its impact on manufacturers, distributors, and retailers. And of course, one of the biggest learnings that we've had from this is, well, it's not just about Amazon Business, but about Amazon itself. We've learned a lot as we've had these conversations. We encourage you to come visit us on netsuite.com/AmazonBusiness if you want to learn more about some of these things that we've been focused on and what we've learned from our customers and from working with folks like Ian at MDM. With that, I'll go ahead. I'll be talking with you later, but I want to go ahead and turn it over to Dave to focus on the economic outlook. Dave?
Great. Thanks a lot, Ranga. So on behalf of Baird, where we're celebrating our 100th anniversary this year, I'd like to thank MDM for this opportunity and also for our long-term relationship with MDM and Tom which we truly appreciate. In this presentation, first I'll be discussing the macroeconomy, including some drill downs into some key industrial and construction end markets, and then I'll provide details from our just completed fourth quarter survey with an outlook on 2019. So turning to slide 10, last year at this time I concluded this presentation with the comment that from a macro standpoint, the fundamentals are in place that would justify strong economic and stock market fundamentals in the coming year. And that worked out through the first 3 quarters of the year. Thankfully, professionally, mid-year, I changed my view on that, and we wrote a piece called Winter is Coming. And our view from that point forward is that the environment we saw fundamentally and as the stock market goes was as good as it gets. When you look at the upper left-hand chart here, it may not look like much at the end there, the little downturn. However, that's approximately a 20% peak to trough decline in the S&P 500. Since then, we've retraced, bounced about 10% of that. When you look at the upper right, rising interest rates, this is really what sparked growth fears, as well as the fears of what's been called a Fed mistake, raising rates too quickly or too far and squelching the economy. On the lower left, you can see unemployment remains very low, but historically, unemployment bottoms ahead of recession and will spike into recession. It's really a lagging indicator. I wouldn't read too much into the current level other than it's been a long cycle. GDP growth remains good, but here too, somewhat of a lagging economic factor. If you look back on this chart to the fourth quarter of 2007, GDP growth was positive at that point too, but that was the beginning of the last recession as we entered it. Turning to slide 11, some additional fundamental factors here, and some of them a little bit troubling. You look at crude prices, which had been gently rising from early 2016 through mid-year 2018, peaked around 75 and rolled over, currently around $50, signaling something about growth in the overall global economy. And same with copper, bottoming in 2016, also broke down in the mid-2018 range from somewhere almost in the 3.5 range, trading today at about 270. Many market observers view Dr. Copper as a leading industrial indicator, so we'll have to see what the future holds based on that outlook as well. U.S. dollar mostly range-bound for the past several years, and while inflation has picked up a little bit recently, still appears to be well under control. Next slide, we have some short-cycle manufacturing indicators. These data points appear to have either peaked or in the process of peaking by our estimation. When you look at ISM, while it's still in growth mode in the mid-50s, it took a significant step down in December from what we're calling unsustainably hot levels near 60 for some time prior to that. The data from the MDM Baird Survey 2 continues to signal growth, albeit slowing growth. We don't have a chart of that on this page, but we'll be discussing that in a moment, very consistent with what we saw here in the ISM, for example. Manufacturing industrial production appears to be following the same trend as ISM there. And if you look at growth rates in the lower left among short cycle indicators, this is growth rates among the distributors, Fastenal, MSC Industrial, and Grainger, daily sales growth. Those growth rates continue to be pretty good, but over time here and looking forward, we expect some moderation as economic conditions downshift and comparisons are fairly difficult year over year. Finally, as it relates to the stock prices, as you see on the lower right-hand chart there, this is an aggregate of those same companies' stocks. You can see they've generally underperformed the S&P 500 since 2012. They had a terrific fourth quarter 17 and first quarter 18, but have since kind of ground sideways and not performed all that well. So bottom line here, signals among the short cycle indicators would imply that industrial activity should continue to grow in 2019, albeit probably at a slower pace. Turning to slide 13, you can see a number of the factors related to non-residential construction here. 2 of the 3 forward-looking indicators are flashing caution, while the ABI really has been kind of a broken record here, not much predictive power, just grinding sideways. The Dodge contracts and the commercial real estate loan demand indicate some softness ahead, likely in response to higher interest rates. Slide 14. Despite relatively low inventories and build rates below or near historical averages, single-family residential construction has clearly started to slow in response to higher mortgage rates. And as mortgage rates have risen and home prices have gone up, affordability has also become an issue, and you can see that in the upper right that existing home sales have also started to slow. New construction may ultimately have a chilling effect on the repair and remodel, but it hasn't happened yet. You look in the lower right, the remodeling index continues to point to very strong conditions currently. And lower left, that's air conditioning specifically. We could talk about that separately, but we think we're on the front end of a multi-year downturn in the cycle for air conditioning. Other categories such as pool and spa, landscaping, et cetera, seem to be holding up fairly well currently, but more from the survey on that in a moment. Slide 7, putting this all together from a macro standpoint. Slide 15, that would be. You can see that each of the last 4 years we've had a comment about what the next year is going to look like, and you can read those. But for this year, I think the only certainty we see is uncertainty, really. We've got rates and the stock market and economic data and tariffs, government shutdown. I think as we stand here today, whether looking at the stock market as a measuring stick, I don't think anyone would be shocked if we were up or down 10% this year. I don't think anyone really has a good idea as to where we're going, whereas in past years it felt a little bit more certain. So either way, I think 2018, when we looked at that, we thought it would be a higher degree of volatility because of the risks. I think 2018 became as good as it was going to get, and as we look forward to 2019, I think we're looking at a cycle that's getting older. We're looking at money that is tighter, interest rates higher, and so I believe we'll have a soft landing or perhaps something a little bit worse than that. As Ben Bernanke once said, cycles don't die of old age, they're murdered, and usually the weapon is tight money. So given where we are today, hopefully the Fed is on pause for a while and we don't murder this cycle. Now turning to slide 16, we'll start to talk a little bit about individual verticals from the MDM Baird survey here. We continue to get responses from 500 or so privately held companies like all of you, and we thank you very much for that. Aggregate revenues here are about $100 billion, so a very good look at what's going on in the broader distribution market. We hear from small, medium, and large companies from less than 10 million all the way to 5 billion plus, mostly distributors, some manufacturers, all are welcome. Slide 17 shows the agenda for this portion of the call. What we're going to do is we're going to talk about these two separate sectors. One, industrial supply and electrical and datacom, and you can see all the subsectors there. The second is building products distribution, and you can see all of the categories as it relates to that. And then I'll wrap up with some conclusions at the end. On slide 18, the fourth quarter results from the survey are as follows. Fourth quarter growth rates up 5.9%. That's a little stronger than we saw last quarter, and really in line with the strong growth that we had in the second quarter of 2018. Having said that, when we asked all of you in the third quarter what you thought the fourth quarter would look like, you were only expecting 4.7% growth, so clearly 5.9, much better in terms of the outcome there, much better than expected just 90 days ago. Aggregate pricing, still solid here, up about 2%, but dipping slightly over the past couple of surveys, and that's still up nicely relative to 2016 and 2017. Looking forward, the chart on the bottom shows you that the aggregate forecast for the first quarter and for the full year, right around 4% growth. Last quarter, when we asked about 2019, the expectation was closer to 4.5%, so a little bit of moderation there as it relates to the outlook. But I think these forecasts are consistent with a thesis that says growth rates are probably cresting here. We're probably at the later part of the cycle. Next, we're going to begin with the first of two major sectors, that's industrial distribution. And the first subcategory within industrial distribution are these industrial supply categories. That's things like general industrial, MRO, metalworking, safety, fasteners, etc. These are products you'd probably find on the shop floor. When you look at the aggregate growth across industrial supply, still strong year over year. Most categories, surprisingly, in the up mid to upper single digit range, very solid despite the ISM rolling over. And looking forward, the forecast is for about 4% growth in aggregate. It's a deceleration from what we're seeing right now, and a deceleration from what the expectation last quarter. However, 4% seems like more of a soft landing scenario than anything. Next, on slide 21, when you look at pricing across those product categories, pricing overall was up about 2%. Most categories had very constant pricing in the fourth quarter with what they saw in the third quarter. The one that saw the highest acceleration was fasteners, with some additional price increases probably coming in 2019, assuming the tariffs step up from 10% to 25% on April 1st when they make that change. Turning to slide 22, here are some key demand and pricing takeaways from our recent contact conversations with private distributors. From a demand standpoint, consistent strength overall. December a bit weaker, but of course with the placement of the holidays during the week as opposed to on the weekend last year, a little bit of choppiness was expected, but generally quite strong. And then looking forward, moderating growth is probably the most likely outcome. This respondent saying looking for 4% growth, not quite as much as what they saw in 18. And another respondent saying that vendors and customers are predicting slower growth in 2019, but not a recession. So slower than 18, but still positive. On slide 23, some competitive comments for those of you who play in these industrial supply end markets. Supplier price increases continue to come through, whereas historically this respondent used to seeing sort of very low single-digit price increases. This year, seeing mid-single digit. Another saying there's not a minor or major manufacturer supplier that hasn't raised prices to them. So inflation clearly a key theme here. The tariffs, assuming again they go through in late March, early April, we would see that driving additional inflation as those hit the distributors' balance sheets. And then finally, smaller distributors are struggling to keep up with the technology requirements of the industry today, or pushing on a unique service offering. I know that's a theme that MDM has been pushing on for some time, and clearly that shows up in the survey as well. So to summarize the industrial supply category on slide 24, this is a word cloud. So as we gather comments and as we have conversations, the words that appear largest in this word cloud are the ones that come up most frequently. So you can see price increases are clearly the most discussed factor right now. Turning to slide 25, we go a little bit in depth on electrical and datacom specifically. When you look at aggregate growth here, it remained fairly constant in the mid-single digits with some variation between the two categories. And here too, looking for a little bit of a deceleration into 2019 with just 4% growth coming off of maybe 5 or 6% this year, a little bit of deceleration. Slide 26, you can see here electrical pricing moderated a bit. Datacom rolled over pretty significantly, and I think when you look at the pricing here, we had some outsized gains earlier in the year, and then when you look at the commodities, copper prices in the third and fourth quarter, lower petroleum prices that can feed into things like PVC, and lower steel prices potentially driving some of that downside in the second half relative to the first half, particularly in Datacom. Slide 27, some of the comments here. Commercial construction, very good. All verticals up mid-single digits. Backlog very strong, but residential slowing down. And that's clearly a theme we're seeing in the economy today. MRO and OEM, that's maintenance, repair, and operations, and original equipment manufacturers. Both of those end markets, manufacturing type end markets, very consistent, which is another theme. And then oil and gas slowing down. We're seeing some reductions in the CapEx budgets there with the lower price of oil. Datacom, fourth quarter picked up a little bit relative to what this respondent saw in prior quarters. Turning to slide 28, as we think about pricing and the outlook, pricing is expected to be a little bit more moderate in this category going forward. There's not so many price increases going through, and I think that is because of those commodities rolling over. One of the themes we're hearing across all distribution industries is labor markets being very tight, and customers complaining about that, asking where they can find good contractors. And then as far as the outlook here, I think cautious optimism in this category as well. Feel good about 2019, and the first half, this respondent says, should be pretty solid. Back half a little more unknown. That's pretty common through these surveys, that as you go out further, the visibility gets less, so I wouldn't read much into that. Finally, the word cloud on electrical and datacom, similar to industrial, significant positivity here. Price increases remain strong, but you start to see things like price and margin pressure and competition start to pop up in the conversation. The last category we'll talk about in general here is the building products distribution area. And when you look on slide 31, we have revenue trends for some of these various subcategories of building products distribution. I would point out that the fourth quarter survey is a little bit tricky because it's less seasonally significant given the construction trends and that sort of thing in the fourth and first quarters of the year seasonally. But a cool November and December drove good HVAC sales. Roofing and wallboard weak again in fourth quarter, but probably more importantly, they're looking like probably the slowest growth areas of 2019 as well, both at about 1%. That's roofing and wallboard relative to the overall building products category expectation of 4% growth. On slide 32, building products pricing remained positive, even though, as you can see from these subcategories, it did come down a bit relative to what we saw in the second and third quarters. We're seeing good, strong price increases across things like HVAC, whereas in roofing we saw some earlier in the year. Those did back off. But in other categories where distributors are selling manufactured goods, the pricing environment tends to remain fairly decent, and I think we're looking at additional price increases into 2019. On slide 33, this is HVAC specific. I'll go through this pretty quickly, but clearly fourth quarter was strong, driven by the weather. We're seeing good price increases here based on the commodity increases in steel and copper and so forth, and expectation for good trends going forward. We'll keep our eyes on that. We do think there's a cycle coming up here that could lead to a downturn. The word cloud on HVAC, clearly for price increases. Next up is roofing. Demand here in this building products category remains sluggish. Pricing is flattening out pretty tough across the board. Residential much harder than commercial, and I think that's a common theme across construction overall and renovation, that commercial construction and renovation is slightly stronger than residential right now given the increase in rates. And then finally, in terms of the big categories here, wallboard on slide 36, very, very difficult trends here. Weak demand in the slowing housing market. Pricing, very challenging. We're seeing somewhat of a price war going on there right now, and new year price increases are not expected to hold. So across the board here, pretty weak in the gypsum market. Finally, just some quick comments here. I won't go through these, but with pool and spa and landscape supplies, a lot of those same themes. Volume is in the fourth quarter a little sluggish, but that's seasonal. We think overall decent growth there, good pricing as we move forward. And then finally, to wrap up here on slide 38, lumber and building materials. I mentioned that housing affordability, that's becoming a bit of an issue on the new construction side. Facilities maintenance for all facilities, still good demand, but remains competitive. So with that, I'll go through some conclusions here quickly. On slide 40, this is the output that we have from our survey. So for those of you that take the survey, you're familiar with this. This is a grid showing survey results for 18 product subcategories sorted by current quarter growth. I think the takeaways here are, first of all, the industrial categories remain pretty strong, near the top of the list, whereas the residential construction-related lines are near the bottom, as would be expected from the feedback here. The second observation is that pricing is up across the board pretty much, with a couple of exceptions, but definitely some moderation relative to last quarter, particularly in the building products categories. And then finally, growth is expected in 2019 to be good, although decelerating fairly significantly from 2019, consistent with that late cycle view. So the forecast of around 4% coming off of fourth quarter 18 growth, which is closer to 6%. To conclude on slide 41, 2018 was started out okay, ended up as a terrible year for risk assets broadly, including FANG stocks and cryptocurrency. And across my coverage list, as you can see here, we only had 3 distributors, public distributors on our coverage list that outperformed the S&P 500. And as you see below, we had many that underperformed by a wide margin, and many of those, 20, 30, even as high as 40 or 50% underperformance in a really rough year in 2018. I think debt was a big portion of that. The companies that had high leverage underperformed to a greater extent, but nonetheless, a very, very challenging year. As we look out to next year, as I've been saying, I think moderating growth is the theme. Most of the indicators would point to that. We assume that 2019 will continue to be a year of uncertainty with high volatility based on all of these moving parts. So that's it. I will leave it there. I do have a conclusion here on 3 major sectors, but I'll let you read that at your leisure. So with that, I'll stop on slide 42. We have our contact information. Please feel free to reach out to Luke, Quinn, or me for additional information. And if you would, whitelist Manthe survey at rwbaird.com. That'll make sure you get this information on a quarterly basis. So for those of you who participate in the survey, as always, we appreciate your input. We look forward to sharing this data with you each of the quarters throughout 2019. So with that, I will turn it back over to Tom and Ian so they can discuss key trends that MDM sees for distributors in 2019.
Dave, thank you very much. As always, a really fast-moving but very comprehensive overview of what you've boiled down for both the prior year, but what you see upcoming. Thank you so much. We will have Q&A at the end, but I just want to touch base before we transition into our part of this, Dave. I have one question, and can you just talk a little bit about what you see in terms of impacts of a trade deal between the U.S. and China? Dave, are you on mute?
Can you hear me, Tom?
Yeah, I hear you.
Okay, great. To this point, as it relates to the tariffs, as you know, we've had different sections. We've had multiple lists within each of those, and there's different products that get caught up in each of those different subcategories. I would say to this point, what we've seen broadly across distribution, and what I mentioned about finished goods that distributors are selling, in most cases, it's reading through the channel as a general price increase. So a lot of distributors are simply going to their customers and saying, on this shop vac or on this motor or on this, X, Y, and Z, we're raising price 2%. And that's going through normally. If the tariffs get rolled back, I don't think that will get rolled back. So I think those price increases are durable. Where it becomes a challenge is in the commodities market, where you're buying products that are trading based on the trade deal or lack thereof. That could be an issue. And then second is even finished goods like fasteners, for example, that are being imported from China. Clearly, there's a tariff on that complete item. and 10% today going to 25%, that's a big tariff. So there's a lot more to deal with there. But I would say generally, we've seen it feed through in 90% plus of the cases as just a low single-digit price increase. And I think that's probably what's on tap for next year as well, with those notable exceptions.
Great. Thank you so much, Dave. So just as a quick reminder, we will be sending out an email following up this call tomorrow. It will include both the handouts of today's slides as well as a recording of today's webcast if you'd like to share it with colleagues. You can also download them now at mdm.com/slides. We will also be producing a white paper that we will follow up by email and send to you 7 to 10 days from now that will have much more detail around the call here today, and particularly in the survey slides that Ian and I are just about to summarize here right now. So our 2019 MDM Distribution Outlook Survey, it shifts gears, and just to clarify from what Dave just presented, while the Baird MDM survey really focuses by sector on these financial and economic drivers that are really affecting each sector, our annual Outlook survey really is a little bit more strategic in terms of taking a look at the competitive landscape and what are some of the shifts taking place. So with that, it really provides a pretty broad representation, but again, similar to the Baird survey, we pretty much overlap in terms of the audience, in terms of the response rates that we get as well. Kind of as a top line, really the overall outlook for 2019 continues to be extremely optimistic. I mean, this slide really parallels and confirms a lot of what Dave talked about. Distributors are bullish, but there's started to be some nagging doubts starting to creep in. And particularly the kind of the key piece on here is that 30% uncertain. And that's very much a shift from what we saw last year. With that, Ian, would you like to take this on?
Yeah, so we asked distributors what changes they made in 2018 to be successful. So this is a look backwards. And there were a whole bunch of factors named, and they were fairly closely ranked. The big three were obviously around pricing and profitability. There's a lot of data in the survey about how people are struggling to hire the right employees because it's such a tight labor market, but they're investing in training and development. And then there's a big trend that continues towards technology investments, which continues in the second tier around digital. The training is a continuation of the investing in employees. And then there's the sales team investment, which is also an investment in employees. So it just comes out everywhere that people are investing in their teams, whether it's in sales, customer service, digital talent, technology talent, et cetera. And then there's a series of other things that they're investing in that, again, are primarily related to IT of some kind, whether it's analytics or marketing tends to be in marketing automation investments, and then sort of the typical thing you would expect a distributor to be interested in, which is inventory and product expansion. Now, we also asked them about what their top three concerns are for 2019. So multiple answers are allowed in these kinds of questions. But the two that just jumped off the charts, by far the most serious concerns for distributors are economic conditions and the tariff/trade wars. This came up again and again and was continued actually at the bottom. Discussions around government and politics, disruption, uncertainty, with a relatively equal number of distributors blaming the White House versus Congress, by the way, which is interesting. And then in the middle, there's a continuation around being able to hire and retain the right talent. A lot of comments about disruption, consolidation, and consolidation was mentioned both within the distribution channel, but also customer consolidation and supplier consolidation. We asked about key business priorities in 2019, also multiple answers allowed. So there were a whole bunch of different answers, and I aggregated them into these. And the bigger the area that these blocks take up, the more frequent the response was. So the biggest two concerns in a dead heat finish were revenue growth and increasing profitability, followed closely by customer retention. The customer retention comments, if you dive into the survey like I did, are around losing customers to digital players primarily. So there's a lot of concern about disruptors entering the industry and offering value propositions that traditional distributors can't match. We asked about sales growth expectations. Our distributors that we surveyed were a little bit more optimistic than Dave's. I would like to attribute that to the fact that they're reading MDM, but it's probably just a statistical anomaly. But on average, the most common selected answer was up 5 to 10%, and then there was a bell curve around that with a nearly equal number being up, predicting that they'll be up 10%, and another group predicting they'll be up less than 5%. The number that were flat were predicted to be flat was very small, and then literally no one predicted that they'd be down 0 to 5%, and a very small number predicted they'd be down 5 to 10%, and no one predicted they'd be down more than that. So I'd say overall this is a pretty optimistic view, but again, going through the comments, the uncertainty around economic conditions and the political situation comes through again and again in the comments.
And for me, Ian, here, the takeaway is when you look at last year's same question, what moderated here was really at the top end, because last year we had 28% people indicate that they thought they were going to be up more than 10%, and that's definitely backing off this year.
Yeah, I think they're seeing the same thing that Dave's seeing, that there are some trends that are slowing down. So we asked the distributors, well, what are your growth strategies? What are the initiatives that you're putting in place to grow revenues in 2019? And new products jumped out, along with sales to existing customers, another dead heat finish, a lot of enthusiasm and investment around e-commerce capabilities, and then a smattering of other factors. But these were, clearly the big three that jumped off the page. I think, e-commerce is a response to what's happening both in terms of changing customer needs and the competitive environment. And the sales to existing customers in the comments also reflects a focus on fighting back against players with new capabilities who are trying to take those customers away. Now, we asked around about cost control strategy, and it was interesting because almost nobody answered that they were going to reduce headcount. In fact, it was so small I didn't even put it on the chart. But there was a huge amount of interest around improving employee productivity, which of course is directly related to streamlining and automating processes. So we interpret this to mean that distributors are investing in technology, a lot of analytics investments, and other types of technologies they can bring to bear to make employees more productive. And then, as always, there's some focus on reducing product costs.
So those are the key highlights out of our survey. It actually dives a lot deeper, and as I said, we'll be following up in about 7 to 10 days with a white paper that really does provide a much deeper. So you'll be getting a much stronger look in terms of what the survey results are telling us this year, as well as some of our comments around that. So to finish up here, what Ian and I would like to do is really come back full circle and talk a little bit and try to bring together both what Dave talked about and triangulate also with our survey, as well as a lot of the research we've been doing really the last 12 months and really identify what are the key shifts that are taking place. So if we dive into the first one and take a look at managing the cycle, it's really around this pricing and profitability that kept popping up in the word clouds, and it's like the real estate saying in terms of there's really three things that are driving change in 2019, and really the other thing that also our survey was in violent agreement with Dave as well is really around all these concepts around the disruption and uncertainty that we're getting reporting on. There's two issues around digital here that I think are particularly making this shift in the business cycle different from previous ones, and that is just in degree and how much digital has entered into sort of the mainstream of our economy. And one aspect of this is digital migration, because I think within distribution itself, what we're seeing here, this transition right now as we go into 2019, is this focus over the last several years that really has been on e-commerce and getting web enabled in terms of being able to get transactional and capable along that, to really shifting to much a more holistic or broader based how do we become much more a digitally enabled distributor. The final aspect around this is digital disruption, and this is so important we actually created this distinct slide here, and Ian, please take it away.
Yeah, so as the person who's taken the lead on most of the research around this at MDM, I think I get a lot of questions about, well, what's Amazon Business going to do in the future? I think the key bullets are, first of all, you're going to continue to see rapid growth in revenues. I mean, Amazon as a company, grew 30% off of, we haven't seen their full year numbers, but they're probably going to have gone from about $178 billion in 2017 to $230 billion or so in 2018. That's unprecedented, breathtaking growth. My guess is that whatever that growth is in 2019 for Amazon overall, Amazon Business will exceed that. They'll likely continue to add SKUs and persuade more distribution partners to join them because marketplaces are a really great solution for tail spend problems, and Amazon Business has the only really good solution for a marketplace today. I think you'll hear a lot about Amazon using artificial intelligence, but our view is what they're really trying to do is disconnect keyboards from online ordering. So, not that people aren't going to continue to use keyboards on their phones and their laptops and their desktops, but they really want to make online ordering originate with voice, with image recognition, and with Internet of Things sensors, so that businesses are taking people out of the loop in purchasing, so that machines are ordering their own replacement parts, and MRO bins are reordering on their own, that people are using cameras to take pictures of items, and that people are using voice with Alexa technology. So I think the paradigm that has existed since the Internet was launched, that a keyboard is the point of origination for online orders, that connection is going to continually weaken over time. Third, Amazon has a major concern or response about antitrust risk right now. They're under a lot of pressure from the FTC, a lot of scrutiny anyway. You see that in their advertising campaign and some of their public relations actions. And I think it's going to affect some of their strategic decisions because the only entity big enough to stop Amazon is likely the federal government. And the government of Germany has already launched an antitrust investigation into Amazon there. And of course, they're a smaller part of the online market there than in the U.S. So this is, if you read the stuff that we produce, this is going to cause various reactions in how they craft and implement their strategies. Last, and this is sort of our bold prediction for the day, I guess, we believe Amazon Business is going to enter the vending market in B2B, either organically or through an acquisition. And the reason we say that is that what they've done in B2B is a tailored version of what they've done in retail in terms of building process connections and systems connections to customers. So there's a reason they bought Ring Doorbell, and that now Amazon has the ability, if you authorize it and have the right technology, to unlock your front door and put the package inside the foyer of your house or apartment. And there's a reason that they're connected with some of the automotive companies so that they can unlock the trunk of your car and put the package in it wherever it is that you work. And the B2B equivalent of that is vending. And I think given how Amazon Business wants to be absolutely fundamental to business processes and they want to be intrusive in a helpful way, they're going to go into vending next. And then the last thing is that you're going to continue to see a growth in marketplace disruptors. We hear that Walmart's going to enter B2B. There's another marketplace called Supply Hub that's developing. Berkshire's involved in what's right now a sourcing marketplace. And I think you're going to continue to see growing technology gaps between these disruptors and traditional distributors.
The other element here, and Ranga, I'm going to ask you to come back in and comment here for a second, because you've obviously been covering this and particularly what's happening with your customers right now and how they're leveraging your technology. But we put customer platforms in this list here because I think what we're seeing emerging, and I think will continue, is this really isn't about supplier to distributor disruption. There's a lot of customer disruption coming from that side of the channel in terms of strengthening purchasing organizations, leveraging buying power that are really emerging in different forms that we have not, in terms of how customers and groups of customers are starting to leverage digital on their side to really try to gain some buying leverage. So with that, Ranga, let me bring you back in. Thoughts about what we just outlined on this slide here?
Yeah, no, I was going to bring up a couple things, Tom. I mean, one of the things that Ian talked about, one of the concerns was digital migration, i.e. people, distributors worried about losing their customers digitally from to other places like Amazon is one example, and some of these others that you have on the slide. And I know that there's continuing focus on how they can put technology in place to make their relationship with their customers stickier, so that it's easier for them to order from them and to make that go into place. And whether it's in this drive to replace keyboards, but also just other their own customer platform, like you said, for them to order and to be able to have that. I think that's one of the things we're seeing more and more. The other thing I was going to add on here as well, I think is really important, is on the Amazon business side versus Amazon. That's one of the things that came out loud and clear from talking to our customers, is how much they were kind of evaluating and looking at just Amazon itself, both as a partner and a competitor. And I think that's another important point, which I want to make sure doesn't get lost, which is as important and impactful Amazon business is, Amazon itself is also having a big impact, and that's one of the big things that that our customers are telling us. And I think particularly because manufacturers are looking at it saying, well, how do I evaluate my distributor partners versus Amazon as an example? So, anyways, I did want to raise that one in particular, Tom, because it seems like it's been an interesting conversation and a challenge that a lot of distributors and manufacturers are facing with right now.
Great, thank you, Ranga. Moving on to the next item, leveraging limited resources, and this really, I think, the data points to this shaping out across two different areas, and one is across technology, again, in terms of this shift from an e-commerce focus to a broader digital focus. But I think right behind that is this focus on analytics, in terms of everybody's trying to get smarter and start to bring analytics into driving the business. And so that's another element. The other shift I think that you're seeing is this really, again, a migration to, we've become such an app world, and this is just accelerating really in terms of how best to integrate the very customized and specific applications that fit for a particular unique requirements for every single distributor. And again, it's a shift from really more back office focus to more customer-centric platforms. Ranga, again, I invite you just to have a comment on that as well.
Yeah, no, I was going to say on the first one in particular, on the technology front, we're seeing that more and more, where there's a lot of interest and focus on making sure that they have the right data to be able to make decisions. So, we see over and over again this question of how do they, if they've got the data to be able to make those decisions, they can make that a lot faster. That either being a challenge that is leading them to investing more in technology, or the ones that have it, that's the focus is how do I pull more of this data together? How do I leverage it? And so it's a big investment for us. In fact, it's one of the things that we as an organization are really focused on moving forward, as well as how do we increase the value of our own analytics that we provide out of the box.
Yeah, thanks, Ranga. Channel value is in here for a couple of different reasons. It is shifting very quickly. We've certainly written about that a lot this past year. But I think it really does boil down to this focus on attributes. As a blog that we ran by Bill McLeod outlined some very good points in terms of considering what these attributes are going to need to look like in the future for distributors, but really around moats and niches, and really defining value very carefully. I think the key shift in particular that seems to be taking place is those distributors who have really focused on the bottom line, who have focused on their pricing and have a stronger balance sheet, are in a much better position going into 2019 with how they can define where they can the available resources and where they can invest as we go into a potential downturn in the economy. The final slide I want to get to here before we turn it to Q&A in the last few minutes we have is to talk about talent. This is an area that for the last several years, it keeps it's very persistent in terms of being a challenge for distributors. But as I said at the top of the webcast, it seems to move the slowest in terms of industry-wide how distributors are really starting to bring in training and start to adapt to a very quickly shifting landscape. Perhaps the biggest example of that really is in the sales models that distributors have been running, and just the very the fact that they really have probably the largest opportunity for gaining leverage of any part of a business, and is probably the most difficult to attack. So that there is this shift that's taking place, and again, there's no one size fits all, but there is this migration, I think, that we'll see a lot more take place in 2019 from an outside sales-based model that has really driven the last decades to a more of an inside-centric, team-based model, and one that's very much integrated with the digital aspects of support as well. Again, analytics being brought in to drive the sales strategy more so than what traditional outside sales models have driven in the past. Not a new theme by any means, but I think you're going to see some large shifts in 2019 along those lines. The last aspect is yes, go ahead.
Oh, sorry, no, just one quick comment I want to make on that sales model piece. I think, just to comment on that, one of the things that I think we talked about last year, and you're only starting to see it now, is just this notion of, as companies look at their commerce channel as not a competitor, but just one other additional element for people to order. And I think the shift that you're describing here of that team-based approach and being more inside-centric kind of just reinforces that. Order however you're going to order. All the revenue is the same to us, as opposed to the web channel we're going to treat differently, and we're going to make it competitive with our with our normal channel.
Yeah, thank you, Ranga. With that, I'd like to wrap up. We just have a few minutes left here for Q&A, but I guess the takeaway really is just to bring this back full circle. I started out referencing Sears and the cycle that Sears went through. I think 2019 is again a pivotal year for distributors in terms of the shift in a business cycle, and I think these three areas that we outlined are really going to define how these competitive gaps are going to play out throughout the year. With that, I'd like to come back to a few questions. Again, if you do have a question, we just have a few minutes. If we don't get to your question, we will try to follow it up in a follow-up email. Dave, coming back to your presentation, we have a number of attendees today who have contractor market segments. Do you have some insight into how residential markets tries to catch up and the relationship compared to commercial markets? Any insight into that?
Well, I think what the data is showing us right now is that most of the weakness is concentrated in residential new construction, and the repair and remodel tends to be okay. And I think the main reason for that is if your roof is leaking, if your air conditioner doesn't work in Texas or Florida, you replace those things. And then commercial construction, even though some of the forward-looking indicators are indicating that maybe things will slow down a bit, we've also heard from like wallboard distributors, for example, who are seeing weakness in residential, that are saying some of their commercial customers are booked out through 2019. So I think we're still seeing this dichotomy between weakish new residential construction, okay repair and remodel residential, and still good commercial construction, which tends to lag the residential side. So we'll see how things play out, but as it stands right now, that's the picture.
Great, thank you, Dave. And with that, we are coming close to the top of the hour, so I am going to have to close up the Q&A. Again, Dave, Ranga, Ian, thank you so much, and I hope our program has proved helpful to you, our listeners, to identify where and how you might make your team more adaptive and proactive in 2019. I'd like to thank Oracle NetSuite for its sponsorship of our program today, as well as its support of research and educational programming in wholesale distribution trends. We will send a link today to access a recording of this program. Please feel free to share it with your colleagues. And thank you for joining us today. This concludes our program.